Tuesday, May 27th, market analysis. Stan Ehrlich. Good morning, 10:06 California time. We've got another strong day. The end of last week has so far hit a low that came close on the E-mini to closing gaps. Now, I should say I start out with the stock market indexes, E-mini, of course, and go to futures, and I've got a few stocks that I follow after that. The downside correction did not close the gap, something to note. So we popped back basically on the holiday yesterday, significantly more, and follow through today, which because the SPY did not trade yesterday, will, and I'll show you in a moment, it created a gap with the SPY. So that's relevant, but there's no gap on the ES, the MES, whatever. But we are at a little layer of resistance, which this line has been there for quite a long time. And now we're back up to it again. Now we're not overbought. I would love to have said that. It would add fuel to the expectation the market's going to turn down. I don't have that. So there is a possibility that it's going to pop through, test these highs, and even go further. I'm not sure about that. I can't come to that conclusion. Frankly, I have to roll over and say this could be a rally high. This would be the way a bear move would act on rallies, somewhere in the ballpark of 40, 60% back up, half back up for the last dip down, and then again down. So I haven't got either one. I haven't got any upside follow through. I'm at a resistance level and no help from RSI. I'm kind of in a limbo here, but I do favor it turning down. The 1 minute chart got to very, very high overbought conditions, but again, that's extremely fine-tuned 1 minute. Nevertheless, they are way up there on the scale in the low 90s. And most of the time, that does produce a little bit of a dip, but as to whether it develops into something a lot bigger on the downside remains to be seen. And we've got the gap in the SPY, like I said, right above a resistance area, almost perfectly, like it was a knife through butter, and now approaching previous highs. But I don't get any help from RSI. I don't know. I'm still a little between a rock and a hard spot here. I'm sorry. I would love to come to a significant conclusion, but I'm giving you a little bit of guideline. And the rest of the indexes are going to be somewhat like that, but not exactly. Here's the SPY 1 minute. Now the QQQ gapped up, as you would expect. It didn't trade yesterday. Then NQ does not have a gap. You'll see in a moment. And it is back up near those previous highs where it did top out before. We're not overbought like before, but we did have a sell signal at the top of the market so far. And if that stays true, then we're probably going to turn back down. But all you got to do is close above that 522.90-ish. And this thing could test the highs of the whole market rally of 540. And who knows after that? Probably more. But we're at that tipping point. I'm not sure. So here's the 1 minute data on the QQQ. Now, the NASDAQ futures did trade yesterday, no gap to fill, and as a result, and there wouldn't have been otherwise, actually. But coming up to resistance, not really proving itself yet, not overbought. This is kind of a rally you might see in a beginning of a bear trend, but it's got to almost immediately turn down. If it goes up, you could develop a double top, maybe. It might get overbought, but pretty close. And then going through these highs, you're probably going to get to my resistance line at 21,730-ish, and then maybe even to the top. I'm not sure. Here is the YM. A little bit different story. This is simply a nice rally back up to a resistance area, and the bottom of it, it's not particularly close to making a new high for the whole trend like the other indexes are, or for the recent rally, that is, and for the long-term trend also in some cases. I'm still not getting a lot of help out of this, but I do talk about the bear side of this chart a little more so because the resistance area, that's about it. All right. By the way, bonds are very interesting. Interest rate futures this morning could lend a hand to the future of the indexes. So watch out in a moment. RTY, the Russell, resistance area, looks like the rest of them. Can't come to any definitive conclusion. Nope, not even with 1 minute. Now, bonds have produced a bullish engulfing ER buy signal. This is a major buy signal, I hope. There's no way to tell, in my opinion. We might get a small rally, we might get a medium, we might get a very, very, very big one, or it may fail. Right now, fail safe stop just below today's low. But it depends upon how much more strength we get and how quickly we get it, because that stop is not going to stay at that level more than maybe even minutes, if hours, probably already a lot higher on ER1 scalp, which bought it at the moment we got above the high of the 23rd, Friday. That's when the outside up day occurred. That's where we're long from, with a current trade of 112.14. We're in, give or take, at about 0.789, something like that. That'd be fair. Several ticks, but it's just the start, I hope. I do not rule out coming back down within a few days into the middle of whatever today's range ends up being, because that's fairly normal. As a matter of fact, ER3 feeds on that retracement. We'll see what happens. But this is an official buy signal in progress. Now, the 10-year notes don't have an outside up day. Even if they did, we were not oversold within the allotted previous number of days. As a result, it will not turn green. But we might still get a bullish engulfing. But we haven't yet. You need to get above Friday's high. Not very far away. Quite possible. It may happen after the YouTube is over. I like what I see, definitely. But again, Friday's high is almost at a resistance area. So let's see it do that and even more quickly. Like the next couple of days being very strong, which would be great for the bond signal. Next, we've got crude oil. A bit of a dip coming down from resistance. Maybe a new low, likely a new low close for a couple of weeks. So this is adding fuel to the bearish fire, of course. We need a close below 50, okay, call it 60 flat, which we're getting close to at 60.63 momentarily. But we've been lower. We've been down to 60.25. So bearish. Next move down. Test these previous lows. Probably support level of 57.40. Haven't drawn that in, but I should. And then the previous two lows, which are very close together, 58.83-ish. And I believe that's it right there, 54.50. Yeah, it'd be 54.83, 54.50, right in that zone. What about natural gas? It also is not doing great, not doing all badly, still around unchanged. But the last couple of weeks have been down, and there was a rally, and I haven't got anything here. I can't change my mind. This looks like still a head and shoulder top in progress, with an incredible small bump before the first shoulder high. A head and shoulder top as the head of the formation that worked. The last shoulder high, almost exactly on time. I think it was 2 days late. And almost exactly to the right price, extremely close. So that is almost a pinpoint, well in advance as to when that high should have, could have, would have, and did happen. So this is a textbook example. Plus the little pimple, as I've been calling it, on the outside of the last shoulder high. And we're coming down, okay, it stopped going down on kind of Thursday, Friday, and today, nothing more to speak of. But it's not going up. And today's high is lower than Friday's high, and today's lower is a little lower than Friday, and we didn't break out to the downside. I think it's going to break the neckline. So far, this pattern is just fine. Very accurate, timing-wise, price-wise so far. Let's see what happens. So I do expect this week that it'll attack the neckline, if not break below the neckline. Next, heating oil. A little bearish. coming down from some resistance, support rather, and making a minor new low for the last couple of weeks. New low close likely. I'm looking for lower levels. Probably we're going to see down to 1.9 and a quarter-ish. Yeah, and then let's see if we test this support level down here as well. 1.88, 1.87 area. That's heat. Gold and silver and platinum. Gold has stopped the rally, and it did trade yesterday with a doji at that resistance bear trend line so far that I've had up there for a while. That's good. Looking for the test, I suppose, of the bottom of this trading range that we've got. Next move down 3,200 almost exactly, 3,201. Then 1119, 3119-ish. Yeah, 3122. After that, of course, a major support area at 2998. Silver. Basically stopping at the resistance level. Maybe the top of that is a little too low. Looks like it should be raised slightly, something like that. Of course, off to the end of the future as well. That doesn't look bad. Yeah, actually, that looks just fine. So I raised the top a little bit, and it correlates with the closings a few days back. That's great. Now down, new lows for a couple days, back into support, and bouncing okay momentarily. But the other metals, I think it's going to test 32.41, probably break that level. Next, 3183 support. Next, 3104. Next is platinum. Overbought like crazy. Got to the top of a resistance area early last week. Couldn't do it the next day. Got through it the next day, Thursday, but did not close above that resistance level or previous highs. Next day is a doji, and that was Monday. It traded yesterday and didn't do much, up a little. And today, kaboom, down, minor low from yesterday's holiday market. Doesn't usually mean too much on those kinds of days. But we're testing already last Friday's low, now back into support. So I don't see any major downside breakout. I really want to close below 1066. Then we're going to start bouncing off of various support levels on the way down, probably getting down to 1009 relatively quickly. 1 week, maybe two. If we start breaking, of course, you've got to break below 1066 first. Next, we've got copper. Bounced off of a resistance level Thursday, and then that's Friday, and then doji yesterday, Monday, holiday, and closed a little higher, but no breakouts, no nothing. Couldn't get through resistance, etc. And then today brought down a bunch. So it's almost like yesterday didn't happen. Doesn't really mean too much one way or the other, technically. That's interesting. So I think it's going to dribble off some more, at least down to 4.5, maybe down again to the support area at 4.48. We'll see what happens after that. And now, grain. Beans aren't doing anything. Doji, sideways. By the way, no Monday market in Chicago. So, well, I shouldn't say that. Board of Trade market. So, sideways, not doing anything. We're getting stuck here. Soybean oil. I've abandoned my long-term bullish double shoulder, head and shoulder bottom because things are not working out. It did break out and fail right away. So, small losses. Stand back. Wait. Nothing to do. I'm waiting for an upside or downside breakout. It's going sideways over a week. Next. Pretty much the same story with a major bearish trend to it, and that is soybean meal. I'm sorry. Every time it lifts its head up, it gets banged in the head again at this resistance area very accurately, very consistently, very often since the middle of April. That's a month and a half. And several times. And it just did it again last week. So I got to look for a test of lows at 290. And I'm afraid to say probably new lows. Excuse me. Corn. it is starting to go sideways a little bit. Doji today, slightly lower momentarily. Not doing anything good, bad, or ugly. It's just sideways here. But I don't have the upside follow through. We did make new lows, but got oversold a couple of weeks ago. The rally hasn't gone anyplace, just up to a little bit of resistance. And I'm afraid it's going to make new lows again. Remember, the other grains just aren't doing what I wanted them to do in order to maintain long-term bullish opinions. Kind of the same thing in corn. So we'll see. I'm not real convinced because of today doesn't lead me to any conclusions. Wheat dips down again and bounced right off of resistance on the rally. And I think pretty obviously, like, what is it, soybean meal, there's a major bear trend in progress and everything above it stops it. Lows get broken. New lows get made, get oversold again, bounce again. This is a classic zigzag, stair-stepping down bear market. No sign of any end at this point, I'm afraid to say, so I'm looking for the lower levels. Cattle. Bearish engulfing today, and a big one. Not that that means it's extra bearish or anything, it's just blatantly obvious. But we didn't make any higher highs since my top of the market, bearish engulfing ER sell signal in red. After testing this price level for a couple times, the third time today, again failed. And that's exactly what I would like. So I'm now looking for 205.35 to be tested and broken, and the next stopping point on the way down should be 202.40. And then I'm thinking it can probably get down to 199-ish. Can't rule out lower. Next, hogs. Support's about to be broken, it looks like. We're not oversold in the support area. We just basically are currently testing support with more problems overhead and a longer-term bear trend prevailing. I think this support's going to go bye-bye, and we're going to start seeing numbers in the 99s. Next, Shell. One of the last four and their stocks. Gapped up a little bit today, but currently close to the low. Could easily close the gap yet today. We'll see. I'm noticing on one of my other screens that the stock indexes are right up there against highs. Again, they're not collapsing. Well, up a 111 on the E-mini. So back to Shell. Not going up with the market that much either. Trying to close the gap first, maybe. Somewhat of a downward slanting channel here for the last couple of weeks. Resistance is stopping it. Not coming to any really great conclusion today, but the bigger picture, since our buy signal at the very bottom, the long-term bullish engulfing ER buy signal, so far long-term, has made higher highs, higher lows, and higher highs. So I favor up in the new highs, and there are a double gap up around 69.30 to 69.60. That's what I'm looking for. Next, Apple. Got down Friday, got oversold. At the same time, tested previous lows on May 7th, earlier this month. Nice combination. So far, it's turned around okay. Excuse me. Also, it went up and closed a gap from last Thursday to last Friday. That's done. Past tense. I think this low might hold. Now I'm looking for this old neckline. Remember, I thought there was a head and shoulder bottom for a few days, but it lasted just only about 3-4 days and then broke below the neckline. And that's the fatal flaw, in particular on May 21st. Then went down another day, and then Friday, a lot, but it oversold, gap down, closed the gap today's rally. Perfect, nice. Is it going to keep going up more? I think there's a good chance of that. I favor up. And as you know, the way Apple goes, the market goes, supposedly. A relatively recent saying. Tesla, new high for the trend, likely new high close, but it left behind a gap. So in this case, I got to think this gap might get closed relatively soon. So something is going to cause Tesla to burp and come back down again, close the gap and go back up. Right now, you're overbought again. Also, this is a prime territory for a divergence top, you know. New highs in price, but not anywhere near a new high in the indicator. And it is over a couple week period, which is a reasonable time period for divergences to occur. Usually not in a couple, 3-4 days. Usually it takes a week or two or 3 or 4. But we're in the right spot, time-wise. Yeah, this might look a little toppy here. Now, I don't care if it still goes up to here for first, up to 372.80. Maybe it'll pop up today or tomorrow there. But the story's still the same. Overbought, probably not a new high in the indicator, even if it's going to go up a little bit more with the price, of course. But then you're overbought in at resistance level. So, and a gap to close still. Next, Carvana. Looking good. New high, trying to close above previous rally highs that we saw on May 14th. And then sitting right there right now, give or take a penny or two. Very, very close. If it can move up a little bit more, I'd feel more comfortable about this. But closing at or below previous highs that were overbought at the time is not a good sign in my book, even if it is above the highs of the last few days. So this is kind of in limbo momentarily, right on a tipping point. We'll see what happens next. Back to the E-mini. Hanging in there. One last peek at the 1 minute. Came down a little bit. Bounced. No new high. Minor slippage. Certainly nothing I would scream bloody murder bearish about. Has to at least start to go below before I get modestly interested. 59.22. Below that looks something, maybe. But then what I really need and want is to get below 58.68. That's going to be very important. You guys have a great day and profitable trading to you.